Welcome to Bunnex Investment Group. In this video, we are going to talk about a very powerful trading system. And those who are going to follow through from the start to finish of this video are definitely going to attain a third eye within the markets. But before we do so, we have a free Telegram channel. I'll leave the link in the description box below. Make sure to become part of that free community. Without further ado, let's actually jump into the content. So before we talk much on the charts, I just want to illustrate a few examples of the trades that we were taking using part of this system. So these trades are actually attainable on our Instagram, and you can as well join our followers on Instagram using the link that I've left in the description box below. On that note, you can see that on USD CHF we had this before and after. So these before setups are actually shared with our VIP members as well as our free Telegram channel members. So on the free side you have 1 or 2 per week, and in the VIP you have a lot more, and they are also explained in detail if you are part of the daily Zoom market analysis. Each and every day we hold an analysis whereby we actually go through each and every pair to create a watch list, which we can wait for it to come into fruition. So in this particular case, you can see USD CHF, it was before, and on the after side it actually made a move. Then another pair was USD CHF as well. It was a trade as an AR50 trade, and it actually came into fruition. Then this was Euro JPY, and it was actually an anticipated trade whereby we wanted it to come to the third level zone so that we can short. Then this was also an AR50 trade before and after, and this was odd CHF. Gold, it was actually an ID50 anticipation, the market to come to the 50 EMA and go right up. Then this was also an ID50 trade to wait for the market to come to this point and then go up like that. But whilst we are talking about these entry points, you can see there are boxes prior to these zones of market entry. So in this particular video, we are going to be talking on how to create these boxes so that you'll be able to catch these clean setups or clean points of entry. And still on that, we have an upcoming training which is starting on the 15th to the 26th of May, going for $200, and this is going to run as an apprenticeship whereby we will be trading together. Then this was Euro GBP. It was also a clean trade which actually followed the exactly what we were anticipating. This was Euro USD. It was actually a pair that made us a lot of money. So enough from that, let's now jump into real business. How do we create these boxes? How do we know that the market is at this particular point in its cycles is what we need to learn for today. All right, so this is gold against US dollar. You've been given a pair like this one by someone. Can you mark it? And where are we going within the markets? I'm just going to go through all the steps that you need to follow for you to know where exactly the market is going with higher probability. We are not saying this system is going to give you 100% accuracy rate, but it's going to give you much higher chances of making winning trades than losing trades. That's where we are coming from by saying you may be able to retire in 90 days, and that now also depends on the amount of capital that you have, the amount of money that you need to pay your bills. But we are saying it's a trading strategy or trading system that can give you much of assurance in your operations. All right, so the first step is to go on the weekly time frame. If I go on the weekly time frame, this is the highest time frame available that is more clear, and I love to use the MT4 because it's more clear than the trading view. Why not trading view? Trading view will actually need us to scale up or stretch the markets and so forth, but in this particular case it's already on default. We can see an impulse clearly. So in this particular case, what can we see? We define what we call a level as an impulse to the upside or to the downside. In this case, we can see this was the lowest point available on the weekly time frame. We want to get what we call a bias of the market, so that when we go to the lower time frames, we have more clarity and we have much more of a clear view of where the market is going. So I use the rectangles, as you've been seeing on our Instagram posts. We actually use these boxes whereby we can mark the impulse. So an impulse to the upside is basically a level, and the other level or the following or the next level is only validated if it breaks the high of the previous impulse. In this case, we can see we had a break above this particular impulse, and in this particular case we can see that the market actually gave us a beautiful impulse to the upside. Then in that case, we had this as a rise to the upside, but that rise was later cleared off by the pullback that was issued by the market makers. So in this case, we would say our third impulse was a long one that started from that point going right above to this zone. So at this point, we can now see that we have what we call a peak formation high. A peak formation high is basically a reversal point that comes after 3 levels of rise or 3 impulses of rise. First leg was issued, then the second leg was issued. After 3 levels, we expect what we call a reset, which is basically a cycle restart. A move towards the reset usually includes 3 levels of the preceding time frame. So in this particular case, after 3 levels to the upside, we wanted to see a reset, right? In this case, we had a reset whereby we had these small moves or small pushes. We can call them swipes to the low, whereby we had level 1, level 2, and level 3. So basically a reset is actually a peak formation, but in this particular case, which would have been reached with a different time frame, preferably the preceding time frame. The weekly time frame preceding is the daily time frame, and we reached this point as a reset. So in this particular case, we are now interested in what is taking place. From this point, we've seen we have a completed cycle on the weekly time frame. After a completed cycle, we have a move down to give us a reset. From that reset, since we've said it's a cycle restart, we are now restarting our count. We can see that the weekly time frame has given us the first level to the upside, and we are now looking to get the second level to the upside like that. And in 1 weekly time frame, we expect to see 3 daily levels. What are we saying? 1 level of any time frame observation will usually consist of 3 levels of its preceding time frame. So 1 weekly level, and by preceding we are using the standard MT4 time frames. The weekly is preceded by the daily and by the H4 and by the H1. Therefore, 1 weekly level is 3 daily levels, 1 daily level is 3 H4 levels, down up to the 5-minute time frame. So within this, we can or we need to verify if it's basically a completed level of the daily time frame. So in this particular case, I am going to use a technique that we call period separators, whereby we actually say a level is a period of rise or drop. So in the upcoming course, we are going to be talking about several techniques in terms of market entry mostly, and within that is where we are going to reveal very strong techniques of counting these levels. So from there we can see that from this particular point we had this rise as the first period of rise, and then we had this as the second period of rise, right? It's actually a month of rise. Then the last one, which is this one. So we had 3 levels to the upside, and after 3 levels to the upside, we come back to the reset point, which is a W pattern. So with all what we have done, since the weekly time frame, we can now say our market bias on gold is upwards from everything that we have done. But we are saying in doing everything, you should be flexible, not rigid, because the market makers can actually change the bias anytime as they wish. In this particular case, we are seeing that we still need more levels to the upside on the weekly time frame, and some pullbacks may be like this one. Therefore, you should always watch out for those kind of moves. So since we have an upward move, we are now going to be looking for upward trading points, right? So we have verified that this weekly level has 3 daily levels to the upside, and in this particular case, we can now say we have the first daily level within the second weekly level. Therefore, we are actually now coming away from the H4 reset point, right? H4 reset point. So we've said in one daily level, we expect to see 3 H4 levels. One level or any time frame that you are looking at, we expect to see 3 levels of the preceding time frame. So to just make a verification, we are saying on the H4 time frame, that daily level that we saw, we have 1, the first level to the upside, then the second level to the upside, like that, and there was consolidation up to this point. Then we had the third level to the upside to create an H4 peak formation high. So this is the logic that we use for us to know where we are going. In this particular case, after these 3 levels of the H4 time frame, we reached what we call an H4 reset. Right? We've said the market is still going right up, and after reaching this point or this zone as a reset point, we now need to know what is taking place for us to get a market entry. So going on the H1 time frame, which is now closer to our trading point, we now know that this is a reset of the H4 time frame. Therefore, if one H4 level has 3 H1 levels, it means we need 9 H1 levels. It's 3 reset, and the last 3. In this particular case, we had a rise, another rise, and this was now influenced with fundamentals, and it's unfortunate that the NFP came and disturbed the cycle. So in this particular case, we are now awaiting for buy patterns, and that is another part of the trading system, which we are not going to talk in this particular YouTube video. So basically, that is how you would go from higher time frame going to the lower time frames. What we trade usually on the lower time frames is actually a support of what is taking place on the higher time frames. You just need to go through, have a bunch of pairs that you move from the higher time frames, and then you come to the lower time frames. So in this particular case, we are saying the market is actually looking as if it has created what we call a half a Batman structure. A half a Batman structure is actually a structure which gives us an outside structure like this, and then it actually goes right away. So whilst we are looking to do so, or whilst we are looking to see that occurring, we can as well try not to force ourselves into the markets if we have failed to enter usually in the London session. So we may actually look to get at a continuation pattern whilst going up like that in support of what we have seen from the higher time frame bias. So basically, analyzing like this will actually give you more and more confirmation on the side that you are taking the market. It will give you more confidence in your tradings and in your trades, so that if you enter, you'll be using a very good lot sizing. In my case, I actually sometimes I'll be able to put a 5 standards. Sometimes I would even scale in 5x3 standards when a pattern is very good and is in support of what we have seen from the higher time frames. So basically, this is a powerful trading system, and those who have mastered, I have several students who have mastered this and are actually now trading full time. It basically needs you to have these technical side, and you should be able to also control your emotions, and that's now another part of trading, which is now trading psychology. So if you feel that you can now control your emotions, or you feel that you are now in control of your trading psychology, we say you now have enough trading psychology capital. So if you have that, and you have enough financial capital and a technical skill, you are good to go, and you will be able to quit your job right away. On that note, we come to the end of this video. I'll see you again in the next one.